Welcome back to Stock Market Weekly. I'm your host, Evan Medeiros. This is the show where we cover the notable moves across financial markets through the lens of technical analysis. We're publishing every single Friday, so make sure you are subscribed to our YouTube channel. Turn on those notifications so you never miss an episode. This is a show you don't want to miss. It was an epic week out there for the markets, and we've got lots of data that I want to get through today. I've got a lot of notes scribbled over here that I want to talk about. I'm probably going to forget to talk about half of it, but there's plenty of information for us to comb through, and I hope you're doing well out there. I hope you survived this week. It was a tough week, right? So if you took some losses, look, you're not alone, right? This was a painful week, one for the record books, and we're going to get into all of that. I was looking through the wardrobe here. I don't have much red, so I had to settle for pink, which doesn't do the damage justice from this week, but here we go. Pink shirt, trying to be bearish on the red. Let's talk about what went down this week. Liberation Day. I mean, that was a catalyst we were talking about last week. It was a catalyst that the market was waiting on, right? This is a known unknown event. This is something similar to a company reporting earnings. We know that there's information that's going to be released. We don't know what that information looks like yet. And what we do as investors and traders is produce a probabilistic weighting of the range of outcomes that we could expect, price options accordingly, position a portfolio accordingly, and off we go into the event. The problem, of course, here with the outcome of Liberation Day is that the results, right, what we got, the news, the tariffs, the amounts were much worse, much more severe than the market was expecting. 34% tariff on China, which I think was really the big one, and some of our other trading partners out there. The baseline 10%, the market probably gets over with pretty quickly or even considers to be a surprise positive. But to see some of these numbers and percentages that were jacked up that high, this is where now we're in this fog of war where what are countries going to respond with? Now, this kind of brews a new sort of way of kind of thinking about markets here, and is if you are a believer that these tariffs are going to persist now, and this is something that the market is going to have to digest, then flat out stocks are just way too expensive, right? You need to see PEs come down, you need to see market multiples come down, because it's just too much of a burden and a heavy lift of what we had all these years to where we're going in this new regime shift. Now, if you are on the other side though, right, you're thinking, okay, well, there's no way these can actually persist. And so either they're going to get negotiated away, or Congress comes in and starts to, legislate out the actions here, right? So I'm not going to go any further than that, but at a high level, I think that's what investors now are starting to think about and plan accordingly. Now, of course, markets are now starting to price in an aggressive amount of rate cuts. Market expectations are now up to 5 rate cuts by the end of the year. I think 1 to 2 by June, and then 3 to 4 by September, and then 4 to 5 by December of 2025. Now, of course, Jerome Powell had a presser on Friday too, and he was not really, eager to agree with any of that positioning. He was basically saying he's not in a hurry to cut. So the administration is trying to thread a very thin needle here. The North Star for them is getting interest rates down. They are succeeding in that. The 10-year Treasury yield was briefly below 4%. I think it went out into the weekend just over 4%, but yields are absolutely coming down right now. And it's going to be a showdown, I think, on Jerome Powell, the Fed, the administration, to see who blinks first, to see how these tariffs unfold into the weekend, into next week. But there are certainly some signs now of fear, proper capitulation. Is it the bottom? Well, we're going to look at a bunch of charts. We're going to look at a bunch of data here in just a minute. Before we get into it, I want to shout out our sponsor, Investors Business Daily. Check out the links we have below here. Market surge, IBD Digital, both great tools to use right now while we navigate a ton of market volatility. You're looking for stocks that are holding up, that are showing some relative strength. There's no better platform. So check out those links. And now let's get into the show. All right, let's move along here. We've got some charts in front of us. Warden TC2000, that's the charting platform we're using in this video. We've got a referral link to Warden TC2000 in the description of this video. We've also got lots of cool downloads and indicators, scans, all kinds of good stuff available on our website, thetraderisk.com. So check that out as well for you new users, for you existing users of TC2000. Let's take a look at the data here. This is going to be one for the record books here. 7, 9 and 10% down for the US averages here. It was an absolute shellacking for stocks. Now, hopefully, if you are a regular listener to Stock Market Weekly, this didn't take you by total surprise, right? This is one of the two scenarios we outlined in last week's video. Check out last week's video if you want to see how we preemptively came into the analysis of this week. But we had, again, just an absolute bloodbath here for stocks. Take a look at the VIX. You're not going to see this too often. Over 40 for the CBOE S&P 500 VIX here. 45 going into the weekend here. That is fear. That is capitulation. Whether it's the start of it, the middle of it, or the end of it is still a little TBD. We're going to work through some of those thoughts in this video, but we absolutely have some fear right now. Let's take a look at the sectors here. You can see everything was in the red. Consumer staples, they were still hit pretty hard here towards the end of the week on Friday, but we can see they held up best, down 2.5%, utilities down 4.5%, and real estate was down 6%. Energy got absolutely hammered here, mostly on Friday with that move, Thursday, Friday, with the move down in oil as the market starts to think about this recession, the odds of a recession rising. Technology was down 11%, and so were financials down 10%. If we take a look at our sector trends, I mean, there's really nothing that you're going to see here. Everything is basically damaged or broken. There are lots of things broken now from a daily time frame. If you're a technical trader looking at trends on any short and medium term horizon, throw them out. Basically everything is broken here. Yes, you can find some relative strength winners and you should be paying attention to those, but in the short term, you know, you are looking at washout, kind of broken, extreme capitulation type moves. And if you're going to play that game, which we will outline a little bit of those the thought process for that, then that is a discrete sort of plan here. But, you know, the trends and the existing stuff here are definitely rolling over. This is our smart trend filter on a weekly time frame. So this is a long-term view of our price and volume indicator, which measures some different price action relationships as well. And you can see now the big trends in some of these sectors here are finally getting challenged and rolling over as well. Technology has been in a longer term downtrend now for several weeks. So has consumer discretionary, but you can see that, you know, utilities, healthcare, financials, right? These, you know, financials had been holding up. They're still arguably holding up on a big, broad, longer term time frame. So again, that matters when you're starting to do some of your stock picks and analysis. Let's take a look at market breadth here. And once again, you're going to see a theme throughout this video is that we are getting signs of capitulation, signs of washouts. Take a look at the number of stocks hitting 52-week lows. That's what we're talking about when we want to see some type of durable low or some type of extreme event. You know, we were dancing around in this, you know, 200, 300 stocks hitting 52-week lows. This is when you start to get the big washouts here, when you get thousands of stocks hitting 52-week lows at once. If I zoom this chart all the way back, take a look at these spikes back here. Technically still didn't get as washed out as we were in some of the points in 2022, but now we're talking about having the ingredients where folks are saying, just get me out, sell everything. I do not want to be involved in this market. And arguably for perhaps some good reasons, right? There's not, you'd have to assume that people are intelligent when they're throwing away stocks, but there are emotions at these periods of time. Let's take another look at the washout levels. This is our 1 month lows here. Okay. So 1 month lows across the S&P 500, 1 month lows across the Nasdaq 100, 1 month lows across the Russell 2000. And now take a look at where we went into the weekend here. 77% of stocks in the S&P 500 are at 1 month lows, almost 80% in the Qs, and 67% in the Russell 2000. Zoom it out here, zoom it out across all these charts. And if you look at where we're going into the weekend here, this is once again another similar to a 52-week low, right? Different look at short-term capitulation. We are at levels where markets tend to springboard when things are getting, just indiscriminately sold. Let's take a look at this same exact indicator now at a 6-month low, okay? How many stocks, what are the percentage of stocks across these respective indices that are now at 6-month lows? And if we zoom out as much as possible, you can see here, we're basically going into the weekend at 50% of stocks, almost across the entire universe of stocks, are at 6-month lows. Draw those lines across your chart. You basically can't find, outside of COVID, right? This chart only goes back to prior to COVID, but you can't find any other instance prior to COVID where we've been more washed out from a 6-month low perspective. So once again, there is fear, there is selling, and there is panic in this stock market right now. Let's take a look at our macro slide here. You can see dollar index was down pretty sharply this week. I mean, there was a huge move in the dollar on Thursday. We'll look at that in just a little bit, but down 0.88% on the week. It did rebound on Friday. You can see a structural downtrend here in UUP. And again, if we look at the 10-year treasury yield, take a look at this here. We did roll over from this consolidation. You know how we were going sideways here, kind of chopping out. We got continuation lower. Once again, this tends to be, or this is full stop, the administration's North Star is getting rates down, lots of debt on the government's books, right? They want to rebalance it, short-term debt. This is their prerogative right now, and they are succeeding in that. They are sacrificing the stock market, right? They are doing unconventional means, so to speak, to get these yields down, but they are working in getting these yields down. You can take a look here at commodities across the board. Almost everything smacked here. Bitcoin standing out. This is one of our prime takeaways from this week. We're going to talk about Bitcoin a little bit later. Gold finally rolling over, showing a little bit of cracks here into the end of the week. Oil absolutely hammered, silver and copper as well. So let's take a look. Let's get started here at our roadmap. And this drawing right in here is exactly where we planned things out last week in the S&P 500. If we rewind our analysis from last week, we talked about two scenarios this week. Nothing involved going up. It was either sideways in this range for longer and then a decision point of a breakout, or it was the measured move down, the vertical move down. Those were the only two options we had really on the table last week. And we had, an attempt to go sideways here, right? Don't forget that markets on Monday, Tuesday, and Wednesday were higher, right? We grinded up on the start of the week. It was a sneaky move up because it lulled people into a false sense of security that, okay, the lows from the prior weeks have held. This market's going to go range bound and head up. Then we had Liberation Day on Wednesday night after the market closed, and all calamity sort of broke loose. S&P 500 down 5% on Thursday, S&P 500 down almost 6% on Friday. So we completely negated and just basically bear flagged and then some down from the early trading up. And here we go. We're at our measured move. In fact, we've exceeded our measured move. Last week, we talked about, just making a second leg down in the market to take us to the approximate August lows from 2024. And we're here. I mean, 3 or 4 sessions. And we spent last week saying, do some homework, get your shopping list ready. If the market goes vertical, I think vertical might only mean up, I don't know, but I'm using it in the down sense. If the markets just cascade lower, you're going to want your shopping list ready, right? I was doing some buying. I'll talk about what I bought this week. And I got some levels on Friday that I wanted to see in some specific stocks and areas. And here we go. So S&P 500, when we look at it now, we are in a broken market. This is broken, right? There is nothing salvageable right now here from a technical perspective. We are closed at the lows and we saw a tremendous amount of dollar volume traded. Again, we have to go back to basically COVID times, brief period in here in 2022, but this is one of the heaviest dollar volume traded sessions that we've seen in the stock market in many, many years. Let's go to a weekly time frame. Let's just see where we go. So yeah, I mean, again, from a weekly perspective, going back many, many decades, you can see this is still a top 10 week, call it, for volume traded, dollar volume traded. So this was a significant week, and it is certainly a week to take notice. So at this point, you are basically, no matter what metric you throw on here, what other technical, measure, if you want to throw on Bollinger Bands here, I mean, take a look at this, right? S&P 500 is just totally outside the Bollinger Band envelope here. It is just sunken below it, and we are certainly oversold, right? So you could put any measurement you want on here. This is what capitulation, this is what a broken market looks like. Broken markets, capitulation, they kind of go hand in hand, and this is where you need to be careful. Now, for you tactical traders that are trying to nail a bottom, nail some type of reversal, even if it's 1 or 2 or 3 days, you're now in the regime of it, right? Now you can start to play that game, and it could come as early as Monday, right? We are primed for some type of snapback, some type of reaction, but it does not have to be yet, right? So if this game that the administration is playing continues to go down into the wire, if we see just increased strongman rhetoric across the board, and you have the Fed out there basically saying, we're waiting and seeing, and we're not going to be, doing any emergency cuts, and the administration runs this to the deadline here and other countries come back, I mean, this could really open up to a significant crash risk, right? This is now the second week in a row that I use the word crash. I don't use that word lightly. I would consider Friday a crash, right? Friday's session here, 6% down in the S&P 500, multi-decade high volume. That to me is a crash. But this is the period where dislocations happen. This is where things truly do break. On some level, I actually think it's a good thing that this is a weekend now, because there's a day for there's 2 days now for the world to sort of calm down, process, right? Talk things out, see what kind of analysis, negotiations, conversations happen over the next 2 days while markets are closed. But these periods, these crash periods, are where things break. These are complex adaptive systems. We have not seen this playbook play out with valuations that we currently are in, with expectations that the market came into the year with, where everyone was thinking that this economy was going to be so great. So there are, this is where things just get a little bit dicey. So you have to keep that tail event in mind. If you are longer term, I still think DCAing, right, dollar cost averaging into declines makes total sense, especially if your outlook is 12 months plus. Buying into Panic's blood like this is, historically got a great track record behind it. Alternatively, if you're an investor that has a series of stocks or ETFs that are at prices that you've been waiting for, another great way to think about this and to get those prices hit as well. And if you're short term, if you're tactical, if you're trying to catch a bottom here, if you're trying to catch the turnaround as a swing trader, you've got the ingredients of capitulation, right? Now you're just waiting and you're watching mostly intraday, right? You're going to be staring at those ticks and you're going to be looking for the just epic volume to be pouring through those 5-minute charts, right? You're going to be looking for the technicals to start to align here. It's probably going to align with some type of news catalyst here of either a more dovish Fed or just conversations that are walking back some of the extreme, tariffs that we saw, and we off to the races where we can start to V-shape off of these levels. It'll likely be a V-shape. It might come in the form of a gap right now, but I think we are in the vicinity where we can keep an eye out from that, but it does not have to be at these levels, right? In my head, right, when I thought about, kind of a bear case scenario, this was the zone right here, August lows. This is the zone that I figured the market could go to. But now that we have more information, now that we see where the administration has landed on their tariff policy, it does not seem unreasonable for me now to envision a scenario here where we negate and give up all of last year's gains, which in the S&P 500 would take us down to about 466. And that would just essentially erase all of the rally from 2024. That would be basically another 10% from here, which again, I don't say lightly, 8%, 9%, somewhere in that range. Maybe that's more where fair value is, given the uncertainty right now in the world, right? So it's a dangerous market environment. You're going to have to know where you live as a trader, as an investor. Do the homework again, get those prices down. If you were a little more defensive this week, you're feeling better, right? I had the luxury of having lots of cash coming into this week. Got caught a little bit buying some here, but quickly, fixed and adjusted and had the luxury to deploy some capital here in some dip buys on Friday. I will talk about them, but again, please do your own homework. This is very dangerous times right now, loaded with opportunity, but it is also carries significant risk. So S&P 500, it's a broken chart right now. We are oversold on all metrics. We do have washout capitulation, but we are not sure if this is the capitulation. If we have another down day of 5%, 6%, circuit breakers at 7%, what gets us to the true bottom? That's anybody's guess. So you're going to have to take it day by day, but we are in that zone, I would say, of fear in the market. Nasdaq 100, here we go, bear market. You can see now we are basically a 22% from highs that were previously made a month and a half ago. We were at all-time highs in the Nasdaq 100, and now a month and a half later, we are in a bear market. So we are back to approximately the August lows. If I throw on a weekly chart here, you can see we're not quite back to the 2022 highs, but once again, same thing like in the S&P 500. If I were to throw on a yearly chart here, the lows of last year at 395, that's pretty damn close already. So we don't have to go too far to get down to 395, but this is a broken chart. We are seeing dislocations right now. You can pay attention to those intraday reversals, and you can pay attention to some of the news flow coming out in the next few days to see if we can get a good turnaround kind of situation. But I suspect we are getting closer now as we go into the weekend. So that, I think, is everything I need to say on the major markets. Be careful out there. Know your plan. Have a plan. If we look at put call ratio charts, we talked about our number of stocks at lows. All of those things suggest we are at a pretty good amount of fear. If we take a look at volatility here, you can see we're going out at 45 in the VIX. If I zoom out here, I mean, again, COVID, we got as high as 70 or so. The one comment I will say about the VIX here is there was a decent amount of dispersion on Thursday. In other words, there were some stocks that were winners and losers. Some of the good defensive spaces were holding up. So the index fall maybe isn't going to get to that 60 plus level in those situations. Friday, of course, now things got a little bit more correlated to one. We saw the defensive and the energies, and everything kind of got taken out on Friday. So you did get a good fear panic push. But again, you've got a VIX at 45. We know it will not sustain here for long periods of time, but it doesn't mean the next 2, 3, 4, 5 days couldn't get higher in the VIX. So just be careful out there. Again, opportunity but risk. Keep both in mind. Dollar index got totally wiped out on Thursday, had one of its biggest declines, and then it sprung board up on Friday. So that was interesting to see. Oil, just an absolute monster move for oil here. It was starting to chug along, starting to break out, and this week 9% down, back into the range here as it totally gets kind of taken out. And we can look at so many other things. Gold, tremendous amount of volume traded this week in gold. It did kind of put in what looks like a little bit of a top here for GLD. So we'll see if that can cool off and come down in the next few days. But for now, I think that's pretty much everything I wanted to talk about in terms of stocks. Let's circle to Bitcoin, because I do think Bitcoin had a pretty notable relative strength week here. This has been trading pretty correlated to sort of tech risk growth, if you will, over the past handful of months. And this week, though, we take a look at Bitcoin, or we take a look at IBIT, just because it's same trading hours as the stock market. It was up 30 basis points, which is pretty impressive and something we want to pay very close attention to. Now, this could have been Madman Sailor out there just doing a ton of buying here. GameStop obviously had an allocation, or shouldn't say obviously, but they now are in the Bitcoin treasury sort of strategy. So it could have been isolated events with a ton of Sailor and GameStop buying, but I don't know. I suspect that there's a little bit more to the story, a little bit more than just those two actors that were able to buoy price as much as we saw this week. So Bitcoin is something I was buying back into today. Or this week. I've traded it now a few times. I, again, originally had the kind of dip buys on that first leg down in Bitcoin. I sold it last Friday at the open, and now I'm a buyer again back in here this week as, not on this day, but throughout this week into Bitcoin. So I think there's something here. I think, again, the big level is still about 81,000. If it's holding above 81,000, then I think this is certainly interesting. It needs to get over 88K or so, 84, 88K to really get a momentum push back up into the 90s. So we'll see if that can happen. But the notable relative strength here, I think, is worthwhile to pay attention to and see what's cooking here for Bitcoin. Another spot I was doing a little bit of buying, which again, I don't advocate for it, is MicroStrategy. Relative strength here once again on the week. This is a Nasdaq 100 stock. MSTR here was up 1.45% this week. It held this 280, 270 level again. Good volume, good relative strength. So we will see, again, extremely volatile. If you've never traded it, then I don't recommend starting now in this environment, but it is a place that I was doing some fishing this week, was Bitcoin, MSTR, and last but not least was semiconductors. 180 was the level I had pinned out and printed out that I wanted to be a buyer. I think I bought it just under 180, but SMH here is something I established a position in, not too heavy. Again, I'm not fully convinced that this is the low that I am nailing here in semiconductors, but it is at a level at which I am willing to step in, start buying, and look for a longer term hold. So SMH, I'm a buyer. Bitcoin, I'm a buyer with a stop around that 81,000 area. And MicroStrategy, I'm in with a stop as well. So those are more trades. SMH, more of a position for me that I was looking for. I had a few other names that I'm interested in. I still have some dry powder. Actually, still have plenty of dry powder, but didn't quite get all the prices I saw. SMH was kind of the first one to get there, and then the Bitcoin MSTR trade. Notably on the Bitcoin side, our automated, our rules-based Galahad trading system is still not involved in this. This is sort of Evan's trading, discretionary trading on the side. So our rules-based methodical trading system that does trade Bitcoin still not involved in this. That trading system, so both of our trading systems this week, Galahad, I think, was down 1.7% this week. Our Lamerick, our swing trading system, was down 1.9%. Both losers this week, but both faring pretty darn well versus S&P, Nasdaq down 9% or so. So I will leave it at the end here with, if you are looking for a rules-based, methodical trading system that is cautious on the risk management and has the ability to navigate these very uncertain times, then check out our trading systems at thetraderist.com. See if they are a good fit for you. But I will leave it there. Don't forget, we got IBD sponsor in the description of this show as well. There's probably plenty more I wanted to talk about, but we've been going pretty long and I'm getting a little tired here. So that is it. Hopefully you made it through okay. Deep breaths. And, thanks again for watching. Take it one step at a time. Do your homework this weekend. I hope this video helped, and we'll see you back here next week. Take care.